A man in his 60s slides a folder across the table toward Jake. Jake has $90,000 and a name that means nothing to anyone in that room. The folder contains the financial records of a small plumbing supply company in suburban Ohio. Annual revenue of $2.4 million, net profit of $380,000, and an owner who wants to retire. Jake looks at the numbers, looks at the man across the table, and asks the question that will define the next 20 years of his life. What is a holding company? The man in his 60s smiles and says, "It is what you are about to become." This is a story of every level of building a holding company from $90,000 to $500 million, and what Jake learned at each level that most Americans will never be taught in any school, any job, or any financial content they will ever consume. Level 1, the first acquisition. Jake is 32 years old. He has $90,000 saved over 8 years of working, living below his means, and investing in index funds that he partially liquidated to make this purchase. He does not know what he is doing yet, not fully, but he knows one thing that the man across the table taught him in that first meeting. A profitable business is worth more than the money it generates, because a profitable business generates money without requiring your direct labor, and that is the closest thing to a money printing machine that exists in the legal economy. Jake buys the plumbing supply company for $320,000, $90,000 down, $230,000 financed through an SBA loan, and a seller note where the retiring owner accepts monthly payments from the business's own cash flow. Jake does not run the business himself. The previous owner's manager stays on. Jake's job at level 1 is not to operate. His job is to not break what already works. The business generates $380,000 in profit in year 1. Jake uses $200,000 to pay down the debt and keeps the rest as reserve. He has no employees, no office, no brand. He has a folder, a business that runs without him, and the beginning of something he cannot yet see clearly. Level 2, the holding structure. Jake is 34. His plumbing supply company is generating cash. The debt is manageable, and the manager he inherited is running the operation better than Jake could have run it himself. And the man from the original meeting introduces Jake to a concept that changes how he sees everything. The holding company. Jake creates a legal entity, a holding company that owns the plumbing supply business, not Jake personally, the holding company. And this distinction, seemingly administrative, is the foundation of everything that follows. The holding company can borrow against the assets of one business to acquire another. The profits from multiple businesses flow into the holding company, reducing tax exposure. The legal liability of one business does not touch the assets of the others. Jake spends $12,000 on lawyers and accountants to structure this correctly, and it is the best $12,000 he will ever spend, because the holding structure transforms one business into the beginning of a portfolio. Level 3, the second acquisition. Jake is 37. The holding company owns one profitable business and has been accumulating cash for 3 years. A business broker sends Jake a listing, a small commercial cleaning company, 42 employees, $2.1 million in annual revenue, $280,000 in annual profit. The owner is divorcing, needs liquidity fast, and is selling below market value. Jake buys it for $800,000, using a combination of cash from the holding company, a bank line of credit secured against the plumbing supply company's assets, and another seller note. And something happens at level 3 that Jake did not anticipate. Two businesses are not twice as complicated as one business. They are 4 times as complicated, because now Jake needs systems to manage managers, reporting structures, cash flow visibility across multiple entities, and the ability to make decisions about one business without starving another of capital. Level 3 is where most people who try to build holding companies stop. Not because the businesses fail, but because the complexity overwhelms the operator. Jake does not stop, but he almost does. 3 times. Level 4, the operational infrastructure. Jake is 39. He hires his first internal team member, not for any of the businesses, for the holding company itself. A chief of staff whose entire job is to make sure Jake has the information he needs to make good decisions. A financial analyst who builds dashboards showing cash flow across all entities in real time. And an external CFO who Jake rents for 2 days a month from a fractional executive firm. These 3 hires cost Jake approximately $400,000 a year, and they return 10 times that in better decisions, avoided mistakes, and freed bandwidth for Jake to do the one thing a holding company owner must do above everything else: find the next acquisition, Level 5, the Flywheel. Jake is 43. The holding company now owns 4 businesses: the plumbing supply company, the commercial cleaning company, a regional pest control franchise, and a small manufacturing operation that makes components for HVAC systems. Combined annual revenue, $14 million. Combined annual profit, $2.1 million. And here's what Level 5 taught Jake that no business school curriculum covers. The businesses that perform best inside a holding company are boring ones. Not because boring businesses are inherently better, but because boring businesses attract less competition, have more stable demand, and are easier to systematize and manage from a distance. Nobody's raising venture capital for pest control. Nobody's writing magazine profiles about plumbing supply, and that complete absence of glamour is what makes them extraordinary inside a portfolio. At Level 5, the flywheel is running. The cash flow from existing businesses funds the acquisition of new businesses. The new businesses add to the cash flow, and the cycle accelerates without requiring Jake to earn more personally. Level 6, the institutional conversation. Jake is 48. The holding company is worth approximately $60 million. And for the first time, people are approaching Jake, not the other way around. Private equity firms want to discuss partnership structures. Family offices want to co-invest in future acquisitions. A regional bank wants to establish a dedicated credit relationship. And a business school professor wants Jake to speak to his entrepreneurship class. Jake sits in rooms that would not have let him in at 32. Not because the rooms changed, but because the holding company changed what Jake represents to the people in them. Money recognizes money, and $60 million of proven cash flow generating assets is a language that opens doors which are invisible to people who do not speak it. Level 7, the $500 million structure. Jake is 54. The holding company owns 19 businesses across 7 industries, employs approximately 800 people, generates annual revenue of $94 million, and has a total enterprise value when Jake commissions a formal valuation of $512 million. $512 million from $90,000 from a folder slid across a table by a man in his 60s in a suburb of Ohio, where Jake had a name nobody recognized and no idea what a holding company was. Here's what those 22 years of building actually taught Jake. The holding company model works because it separates ownership from operation. Most people who build businesses trap themselves inside them. They build something valuable and then become the employee of their own creation. A holding company is designed to prevent that trap by systematically hiring operators, building systems, and acquiring cash flow rather than building it from scratch. It is the closest thing to the way Warren Buffett thinks about money that is available to someone starting with $90,000, and almost nobody in America's middle class knows it exists. Here's what you need to take from Jake's story. You do not need $500 million to start this journey. Jake started with $90,000. You do not need a Harvard MBA or a Wall Street network. Jake had neither. You need one profitable business, a holding structure to own it correctly, and enough patience to let cash flow fund the next acquisition. The folder that changed Jake's life contained the financial records of a plumbing supply company, the most unglamorous business imaginable. And it was the beginning of $500 million, because Jake sat down and asked the right question. You have been decoded. If this video showed you a wealth building structure you did not know existed, subscribe to Money Decoder 3004. Every single week, we decode the financial systems and structures that ordinary Americans are never taught. Simply, honestly, and clearly. Drop a comment below.